the examiner is going to ask you that why you have calculated this certain requirement in the specific way you have calculated. I mean, say in case if you have calculated the goodwill, right? Or if you have calculated, let's just forget the goodwill for a while. Let's just say if you have calculated the Okay, I switched my internet now because I only had to give it 2 tries. Now, hopefully, the examiner is most likely to ask you about the basis on which you have calculated and the reason why you have calculated in such a way. So this can be seen as well. This can be a scenario. This can be a scene over here as well. And this is the section A. Then in section B, the section B is also going to consist of 2 questions, which may be scenario, case study, or essay based, and will contain both descriptive and computational elements. Section B could deal with any aspect of the syllabus, but will always include either a full question or part of a question that requires the appraisal of financial or non-financial information from either the preparers or another stakeholder's perspective. 2 professional marks will be awarded in section B question that requires the analysis. Now, talking about the section B, we are going to have 2 questions of 25 marks each. As I have seen the past papers, as I've studied the past papers, this is a common practice for the examiner to ask 1 question of 25 marks each related to a specific standard, or talking about a specific standard in detail, where we can have multiple scenarios, multiple workings from that specific standards, or we can have a discussion of small, not small, but rather I would say going for the current issues basically, or the current amendments which are over there into the accounting standards and all. So 1 question is going to be there of dealing with, most likely, with one specific standard basically, where either you can have the parts of the questions where you will be dealing with the same accounting standards and you will be applying it onto the different situations. And the second question is going to be in like around 4 or 5 parts, comprising of multiple accounting standards. And in each and every part, you will be applying a new separate standard onto that specific scenario. And while applying that standard, you will be discussing about what should be done according to a specific standard. What should be done according to a specific standard. Again, this is going to be a discussion based scenario. Done. Obviously, the section B will be a discussion based as well, because you will have to discuss about whatever you do. Even if you do 2 plus 2 is equal to 4, even if you do that, you have to discuss it with the examiner, that why do you think 2 plus 2 is 4, right? So this is something uh, we are going to have this approach been built, and this is something which cannot be built in only 1 single day. Obviously, it's time taking process, and during the whole course we will be developing ourselves as far as the discussion is concerned, or how to discuss. And you know what, basically the best thing is, in each and every standard we are going to have, or rather if you look at all of the standards, there are some key points, or there are some uh, a key approach, I would rather say, that how to answer or how to start your discussion. And that is basically, or let's just talk about that as well. The discussion always starts with the introduction of the standard, about what it deals with, what is the recognition criteria, and what the standard says about the particular thing which is being asked in the question. So the first few lines are going to be about that, about the introduction and all. So these are the standard ones. And then we will, jump towards the specific scenario being given to us into the question. So overall, talking about, as far as the number of marks are concerned, so we have this 50-50 in section A and section B. So the total is going to be 100, and it's going to be 3 hours and 15 minutes paper. 15 minutes is for the planning and all, and 3 hours for is the writing time which you have over there for your paper. Now, from this time attempt onwards, we are going to have a bit of a change in the standard, or as far as the SBR is concerned. So the first one is basically the revenue standard. And talking about this revenue standard, basically, I mean, if you have studied it before something, there are 5 steps basically which we have to consider as far as the recognition of the revenue is concerned. We are going to revise this standard as well. I'll be the one who will make sure that you revise this standard, and then we do some of the practice from our exam kit related to this standard as well, so you don't have to worry. But the change is that obviously at first we had to provide the references as far as, the recognition of the revenue is concerned, as far as those 5 steps were concerned. But now we are not going to, or we don't have to memorize those 5 steps, obviously. But the underlying principle is the one basically which we start like first at, when we used to memorize the whole lengthy 5 steps. We don't have to do that anymore. The revenue, and then the second where talking about, we have the consignment arrangement basically now, or we have the consignment into the SBR as well, which will be tested now. And this is something which we are going to cover up as well. Then as far as the SBR, but as most of the students are the exemption, so technically speaking, I'll be when revising the standard, or when revising the standard. So we have a change in the IS 37, that is of the provisions, and we have added the onerous contracts for contracts for the completeness as well. So this is something which we are going to cover up as well. Then as far as the group accounting is concerned, in the statement of cash flows, the significant influence part has been added. So the significant influence part has first, we did not have any working related to the, the subsidiary being converted into the associate. We did not have any working to related to it or whatsoever, but this point has been added now. Then we have a bit of a change into the foreign currency as well. And foreign transactions and entities, if we talk about that, foreign operations, including the subsidiaries, associates, and joint arrangements and the disposal. This ensures that the 3 types of group entities are specifically identified as examinable with an overseas and foreign exchange context. So this is something which has been added as well, and this is going to be, religiously tested now. And then as far as the analysis is concerned, the sustainability reporting is something which I'm kind of expecting into the section B as well this time. And now the ACCA feels that this space has moved on beyond evolving, and discussion would be expected on its wider importance with the business reporting. So this time I'm kind of in the section B as well, then it can make the part of the, it can be made as a part of the section A. Obviously, I'm sorry, I got disconnected. Okay, talking about this climate change and sustainability reporting, basically into the current issues. Basically, this is actually after the COVID, basically, which has been seen that suddenly, if there is something uh, a natural crisis or natural disaster, I can say, then how the things or how the companies have to cop up as far as the reporting is concerned. So this is something that has been added. And then luckily speaking, exposure draft has been removed. Now we don't have to talk about the exposure drafts or something. And discussion of the solutions to the current issues in the financial reporting, talking about that the discussion discuss the developments of the corporate reporting related to sustainability reporting and sustainability standards. So this is something, if I look, these are the changes which are right here before our attempt of the paper. So technically speaking, you can easily expect these to be there somehow, some way, as far as your paper is concerned, right? So this is something uh, you can expect to have in your paper as well, as far as the sustainability reporting is concerned, as far as into the current issues, and as far as the climate change and the standards related to that. So I'll be providing you the link. The best thing is to go through these, or learn through these, is basically is to have a formal documentation. And this is something which I will be giving you, or I'll be sharing the links with you from the ACCA website, where you can access and you can download those articles or the current issues ones. Obviously we will be discussing them in the class, but obviously as far as having the notes is concerned, so it will be available to you from there. And then talking about the approach towards the strategic business reporting, basically. Talking about this approach, if I may say, the whole pyramid of this SBR. This is something in SPR, as in the workplace, you need to consider the point of view of investors and the other stakeholders. This means analyzing and interpreting the information, explaining how transactions affect the financial statements and other reports are explaining accounting treatments and disclosures. So this is something you have to have an approach, as far as looking at a specific accounting standard is concerned. And professionalism is more than calculating the number. It means applying the ethics and judgments and add value, taking a holistic view and communicating professionally. So this is the the professional aspect of the paper, where you have to talk about like you know how to answer your paper, or how to answer your question which has been given to you. So that's why the examiner has highlighted in section B, that the 2 marks or the 2 additional marks are basically for the professional writing style that basically you opt. And then talking about the detailed knowledge of the accounting standards or the current developments that we had. This is something that now we are going to apply in our SBR as well. So this is basically the approach or the mindset, that we don't have to think about only the numbers now. We have to go towards the discussion as well, which is really very important now. We have to go towards the discussion. We have to convince the examiner that why we are thinking about a particular standard regarding a particular application, right? So this is going to be a discussion based as well. And then as far as the questions are concerned, we are going to have the requirements in these three technical ways, and that is either we have to discuss, either we have to explain, or either we have to advise, right? Now, the question approach is analyze the requirements, read the scenario carefully to understand issues and any stakeholders' perspective. So this is something really very important, because when the examiner is asking about a solution according to a specific stakeholder, or according to a specific stakeholder's perspective, then we have to answer it accordingly, right? And then we have to identify the relevant technical knowledge. That is, remember, more than one standard may be relevant, and consider the principles from the conceptual framework. Now, this is very interesting as well. While applying our knowledge to a specific scenario, there can be a situation where we have multiple standards to discuss about. And while discussing the multiple standards, we have to consider the conceptual framework as well. So, this is something we will be bringing in the conceptual framework on and off about the different requirements, or the different, the questions or the scenarios we come across. And we will be discussing that as well. And then you may need to produce some calculations apart from a part of an explanation, but numbers alone not on enough marks to pass. This is for sure. Obviously, in order to succeed in this paper and all, now you have to discuss, rather than only the calculations. You have to discuss about your mentality, what you are thinking about the specific solution. And then writing a good answer, how to demonstrate the professionalism. That is, you have to plan your answer, use the headings and short paragraphs, consider the stakeholders, relevant content, and appropriate tone. Appropriate tone is really very important as well. And appropriate tone means that you don't have to be judgmental, and you don't have to be this is something when it comes towards the discussion now. This is something now you have to understand. You cannot go towards one extreme end. That is, while analyzing some ethical issue, or some while analyzing the performance of the company, you cannot go into the extremities. That is, you should be in between. If the company is performing well, you have to hold your the center or the middle line. You cannot go on praising the company. You cannot go on saying that the company is is now a garbage. It will be liquidated, or it will be closed, or nothing can be done, or something like that. Talking about the professionalism, or talking about the ethical issues, that the company or the seniors are really very unethical, and nothing can be done, or they should be sued, or they should be fired, or legal action should be taken against them, or something. So these are the extremities we have to discuss. That how, while talking about the ethics, how one can safeguard itself from the ethical issues or something, because this is something, talking about the ethicals. Remember, you have, or in, even if in your graduation, when you read about the read in the audits paper, we have some the ethical issues for being an auditor or being an accountant, right? The familiarity, advocacy, and intimidation threat. And then we had some other threats as well. I don't have exactly remember I'm not exactly remembering all the five or six at the moment. Self review, self interest, advocacy, familiarity, and intimidation. Yeah, I remember now. Five threats basically we have already studied over there. So we can put those over here as well. We can apply those ethical threats over here into our current scenario of the SBR as well. And believe me, nobody can deduct your marks, or nobody can say that this is the irrelevant or something, because ethics as a whole, or the ethical issues as a whole, can be anywhere, and they can be applied at anywhere. And basically, the ACCA itself, it copies the all the ethics of the IFAC, basically the IFAC code of ethics, and the ACCA has just simply copy pasted them. So technically speaking, while appearing for any paper and having a discussion about those ethics, technically speaking, we can easily write them down. And then obviously, when we had those ethics, we did happen to talk about, or we did happen to have a discussion about the safeguards from those the ethics as well. So we can, while having an ethical issue into the section A, this is a very brilliant thing which just suddenly came into my mind, during this discussion, that we can easily put in, or we can easily talk about those safeguards as well. Having an ethical issue, we can easily discuss them. And obviously, but again, the ethical issues which we are going to find, we have to apply those to the specific scenario being given, right? We cannot have a general discussion of the ethics. Obviously, the ethics are going to be discussed, but in the context of the scenario being given to us. So this is something you have to keep in your mind. Then we have these examinable documents. These are the accounting standards that we have, ranging from IES 1 to IS 41, and then from IFRS 1 to, we have this IFRS 16, then we have the small medium enterprises, and then we have these exposure drafts. But these exposure drafts are not examinable now. These are the ones which are not examinable now. These last 3 4. So this is the latest amendment. Basically, I did not, I won't lie or something, I did not basically amend this, but obviously I knew about, basically this had to be amended. But basically I took a picture of this and I had pasted it over here into the Word file. So I did not happen to amend this, but obviously the current issues have been added, the sustainability and the environment reporting, and I'll be sharing those as well. So that is examinable now, and this exposure draft is not examinable anymore. So this is a whole discussion, a very detailed discussion about our course, which I just had with you. Now, talking about general discussion about what to do today, let's just have a bit of discussion regarding our reporting framework. Right, this is the conceptual framework and reporting framework. They kind of go along with each other. And the reporting and the conceptual framework, they are the two banks of the river. Basically, they always go together, and they are consistent and persistent with each other. And this is something we are going to have our discussion about, and this is something which is going to be shared with you after the class as well. And in this reporting framework, basically, we are going to look at the bodies responsible for the development of the international accounting standards, and how an entity should switch from switch over from the local gap to the international standards, because this is something, we have a standard IFRS 1, that is the first time adoption of the the international accounting standards. So this is going to be we are going to have the discussion about that as well over here in these slides. And talking about the need for the regulations, basically, apart from this, why do we need the regulations? Basically, by the way, regulations are basically the rules, the regulations, the criteria, the base, the foundation, the skeleton. Like, let's just talk about when we need something, or when we have a need. Rather than discussing why do we need, let's just talk about what happens if we don't have a specific thing that we need. Like, let's just talk about the road safety rules. If we won't have the road safety rules, what will happen? The accidents are going to be at the peak, and the cost of the accidents are going to be high as well. Cost in the context of the human life, if we don't have the road safety, right? If we don't have the road rules. For example, let's just talk about a signal. I mean, why do we have a signal on the roads? So that it ensures that the smooth flow of the traffic is there, and the people are easily able to commute from one place to the other easily. And we have then fines as well, that if somebody breaks the law, he has to pay the fine. And why do we fine? So that the people abide by the rule, they abide by the law, and they follow the rules and the regulations, so that the things are always in place. Now remember, whenever we try to break the rule or something, what happens? The system, or the specific rule for which we break, it collapses. Obviously, if we are standing onto a signal and if we try to break the rule and we try to cross it onto the red light, what can happen? An accident. And in that accident, not only we suffer, but because of us, someone else, suffers as well, right? This is the context basically which we are talking about. So technically talking about the need for the regulation as well, the need for the regulatory framework. Why? Because person is external to the business, normally dependent upon the published financial statements for the information about the business. And the accounting standards, another form of regulations, help to ensure the adopt to similar treatment for items and their financial statements are therefore comparable. Without regulation, management would adopt whichever accounting treatment showed financial statements in the best light. Sources of regulations are accounting standards, company law, and the stock exchange requirements. I mean, like, more or less, all of you are working, and all of you are working into the accounts or into the audit department. This is something you guys know better than me as well. And that is, when we are preparing the accounts, why are we following the accounting standards? I mean, one reason is basically being a student or being a worker, we only know that treatment to do. I mean, let's just get realistic for a second. I mean, why are we following a specific accounting standard? Because we only know that specific standard to be applied, right? We don't know anything else to be done. But the main reason behind following an accounting standard, or why the standards are created, because it's called standard, right? That everybody do that. Now, why do we have the standards? Because when everybody is following the accounting standards, then at the end of the day, there is a qualitative characteristic of financial statements being called as the comparability. And the user of the financial statements can easily then compare the financial statements of the two entities in order to get an idea about where they are standing, or about their overall, the financial position they have, or the financial viability of the business as a whole, right? And the accounting standards basically, they ensure that the reports we make, which are ultimately going to use by the stakeholders, not only the shareholders but the stakeholders, our reports give a true and fair view, and they are properly prepared, and they give the accurate information about the business. Because if the accounting standards are not there, then everyone is going to, going to prepare the accounts according to their own will and desire. And by this, what will happen? Even if you have calculated correctly, even if you have calculated correctly, maybe if your reporting mechanism is wrong or something, you won't be able to deliver, or you won't be able to communicate to your user about what you have calculated and all. And the sources of regulations, obviously we have the laws as well, we have the stock exchange requirements as well, and we have the accounting standards as well. And then the constitution and objectives of the IASC Foundation and ISB. IASC is basically the International Accounting Standard Foundation. And this is an independent, not-profit making foundation. And talking about this foundation, this is run by the trustees who are responsible for its financing and for the appointment of the members to the board. Apart, it also appoints the members of the Standard Advisory Council, and it also makes up the International Financial Reporting Interpretation Committee as well. And the IASB, talking about the IASB, the role is of the IASB is to develop the new accounting standards. And the International Accounting Standard Board, basically, it writes up the new the accounting standards. And basically, at first it was the IASC, and back in 2001, and so basically the IASB basically took over, and and it adopted all of the international accounting standards at that time. So since then, Now, whenever a new standard is created, it's not called as the IAS, right? International Accounting Standard. Now, it's not called as IAS, it's called as IFRS. So, one thing is for sure, if you have to check that which standard was created when, before 2001, they were at the IAS, but when the IASB took over, it just changed the name to the IFRS. So anything which is created after 2001 is going to be called as the IFRS. Now, basically, overall, talking about this ISB and all, there is one criticism that ISS was the number of alternative treatments allowed within a standard. And in preparation for all for the rule out of the ISS across the world, a large number of ISS were rewritten by the ISB in early 2003 to 2004 to eliminate the choices, to tighten up the standards, and to tighten up the basically the loopholes basically the standards had. Therefore, many of the ISAs that exist today are revised versions produced by the ISB and will continue in their area for some years to come. For example, if you talk about the revenue standard, before the updation, it was basically IAS 18 revenue. Now it is IFRS 15 revenue. Before we had IS 17 leases. Now we have IFRS 6 leases. Before that, the loopholes and all, we had IS 38 intangible assets in which the goodwill was treated. But after 2003, in January 2003, the IFRS 3 business combination and the goodwill standard was introduced, and the goodwill was taken out from the IS 38 into a new separate standard, as into IFRS 3. So basically, one thing is for sure, and that is these are man-made. These accounting standards, these are man-made. Obviously, we need to have the amendments, we need to have the updation in these with the passage of time. Done. So these are the man-made. So we can expect that according to as the world is progressing, as the things are developing and the new things are coming in, obviously with the passage of time, we need to have the new standards. The best example is basically of the cryptocurrency we can talk about. I mean, the crypto market. I mean, if you go back like around 10, 12 years, we did not happen to hear any name to it, name of it or something. But now the investment in the cryptocurrency is really very high. And not even the individuals, but even the companies are kind of investing into it to get the benefits and all. So gradually that market is being regulated now as well. And apart from the regulations and all, basically, if we talk about now, we have the new accounting standards to it as well. And gradually, now we are doing the study onto it as well, plus the accounting standard regulating the cryptocurrencies out as well. So we can expect that the ISB basically is working itself around to update the standards and all. Done. And then we have this IFRS framework with us. And compliance with the IFRS, the ISA cannot force countries to follow the IFRS. In 2005, many countries required some or all of their entities to switch to IFRS. Okay. Use of IFRS across the European Union. The European Union issued a regulation requiring the use of IFRS in the consolidated accounts of an entity listed on a EU stock market for financial periods beginning on or after 1st January 2005, and only those standards endorsed by the European Union may be used. Talking about this whole scenario, basically how it came and how basically it worked. Basically, the IASC is not able to force countries to adopt the IFRS, and so it has been left to the individual countries to decide to what extent they want to use the IFRSs. The United States, for example, does not plan to switch to IFRS, and so several harmonization projects are underway to develop the new standards in conjunction with the Financial Accounting Standard Board of the U.S. Standard setters. Basically, in US we have the US GAAP. In UK we have the UK GAAP. Overall, like in Pakistan, if you talk about, in Mauritius, if we talk about, we have the international accounting standards. So this is something, the standards are out there, but again, this is the choice of the countries to, either adopt them or not. And this is something which they decide, right? Let's just have a break of only 1 minute. I just need a minute. I just need to grab some, water for myself. I just need 1 minute only. I'll be back. implementing us the IFRSs or international accounting standards is so we were talking about every country has its own choice either to adopt for the international accounting standards or not. But the countries which are not basically going for the adoption of the accounting standards, basically they are bringing their own accounting standards in harmonization with the international accounting standards, so that a huge difference of reporting is not there, and the information which is being provided with them or provided by them is a bit consistent with the international accounting standards. Then moving from here, now we have the advantages of the harmonization, basically talking about that, how the harmonization basically gives you the advantage, and that is there are many we can say like the advantages are there for harmonizing the accounting standards or the accounting treatment across the world, both to those who are involved in the account preparation and also to the investors as well. I mean, everyone gets the advantage of this. Previously, in order to raise the finance of an on an overseas exchange or something, an entity would need to prepare the financial statements in accordance with the local standards of that exchange. So this was time consuming but also confusing for the investors who used to see two different set of financial statements and felt unsure as to which set was to be relied upon. So technically, this was a bigger issue which is being resolved. And then secondly, consolidated accounts that were to be prepared using the common accounting policies across all the group companies. So this meant that adjustments must be made to the individual company accounts prior to consolidation, which was time consuming and inefficient as well. So like obviously when we came towards the same or harmonization of the accounting standards, these things were kind of overcome. And now when we have to make the consolidation and all, technically even if the subsidiary is of the other country, we don't have any issue whatsoever as far as the consolidation is concerned. We just have to translate the currency into our local one and we just have to add it up. Rather before, when there were some changes as far as the accounting principles or the application was concerned, at first we had to reproduce the accounts of the subsidiary and then we had to consolidate. So it was a very time consuming and hectic work. So technically it was being overcome as well. And then technically speaking, for a group with the entities spread across the world, it is harder for management to identify the performance problem if each entity is using different accounting policies. If all entities were to share the common policies, it facilitates the production of the regular management accounts and reports. The same thing here as well, that technically if the subsidiaries are using different accounting standards and all or different accounting policies, obviously for the parent company it will be really very hard to keep a check and balance on the performance of the subsidiary, because obviously you will have to translate or you will have to convert the accounts at first according to your local standards, and then you will have to evaluate them. So technically this harmonization brought a very good advantage for at least the group basically, or the bigger groups basically, which had the foreign subsidiaries or something, where they were able to easily evaluate the performance of the subsidiaries as well. So if entities in different countries were to share the same accounting framework, it would make the cross company comparison easier for the investor, right? When we have the harmonization, obviously the comparison for the investor is very easy, and honestly speaking, the move to the IFRS has not been as straightforward for the companies as they thought. So this is a cost that they had to pay. So this is technically one of the disadvantage, and there are significant costs associated with switching over to the IFRS as well, namely the man hours required to identify and post the transaction adjustments, additional cost of accounts preparation, as IFRS is generally more onerous than many local gaps, and then audit costs to sign off on the transition work. Computer systems need modifying to cope with the new requirements and all, and accounting staff has to be trained as well. And technically speaking, talking about the back days, there's a bank in UK called as the Barclays Bank, and it reported that it took them like around, or it costed them around 50 million pounds to make the switch from the UK gap to the IFRS, and they felt that their accounts are now less transparent than before because of the increased volume and the complexity of the information. So this is the real story of the Barclays as well, that they ended up paying like around 50 million pounds, and now they kind of feel that the switchover was kind of not as such fruitful for them what they expected basically. And talking uh, about these countries basically, like the tax rules in many countries previously followed the accounting standard, and not all countries are adopting the IFRS basically because many countries have a rule based approach to accounting which then determines the tax charge. Countries switching over to IFRS may then need to rethink their rules for calculating the tax. Otherwise, an entity will have to prepare a second set of accounts under the local GAAP in order to drive the tax charge. So this is something which we have to consider as well. And then again, the ISB is continually amending and improving the suit of the standards basically. And the ISB basically announced that the significant changes will continue through, and this pace of consistent change places lots of pressure on the financial teams as well, especially in a smaller organization, to update themselves on the new standards. I mean, talking about us, I mean, every year we being the ACCA members, along with with the local body as well, we have to attend lots of workshops every year. And one thing which I always feel bad, not bad, but a hectic one as far as one or individual self is concerned, that it is our responsibility to keep ourselves updated with the new changes whenever they are, as far as into the audit or into the accounting standards is concerned. And obviously, I mean, let's just talk about yourself, that you are studying and then at the same time you are working, and then at the same time, because of your work, you have to attend some workshops as well, some training programs as well. And as far as the accountants are concerned, or as far as the auditors are concerned, what are our training sessions? What are our training programs? Obviously, giving us the updation about the new standards. I mean, technically speaking, it's really very hard for us to make up the accounts for a one single year by understanding a specific accounting standard or something, and then we end up going for the adoption of the new standard. I mean, when the standard of the lease changed, I don't know if you guys have practically worked onto it or not. Talking about myself, I had a really very hard time as far as coping up with the new standard is concerned, because the things were really very easy as far as the reporting was concerned, but obviously it had its own loopholes because of which the standard had to change. And then talking about the change in the revenue, I mean, I looked at the new standard of the revenue as well, and it was just like holding your ear like this rather than holding it like that. I mean, it's still the more or less same, the revenue standard, although the five huge points have been added into it, and the complexity of the transaction is also a lot over there. But again, the old standard had some of its loopholes, and the persons who used to take the advantage obviously kept on taking the advantage of the the loophole in the standard, because of which it had to be amended, right? So these are the ones basically. Everything has its own advantages and disadvantages, but obviously the harmonizations disadvantages are also high as well, because one may feel that the adoption of the accounting standard is not as such fruitful to them as compared to the old one. Then a conceptual framework, talking about the conceptual framework and all, we can just simply say that the regulations that govern the rules on the financial reporting are a combination of national laws, accounting standards, stock market requirements, and accounting conventions. And together, these are called the generally accepted accounting principles, or GAAP, right? So this is what the GAAP is basically about. Then, and talking about some countries, obviously they have their own GAAP, like the US and the UK, and other companies, or sorry, other companies, other countries, and many large companies as well. Now they use the international accounting standards, which are an important part of the international GAAP. And international accounting standards are based on the accounting concepts set out in the IASB framework, and all international accounting standards are consistent with this framework. So this is a basic understanding of the conceptual framework as a whole. And if we talk about this IASB framework, a conceptual framework for the preparation for preparing the financial statements, which can be used by the IASB preparers of the financial statements, auditors, and the user of financial statements. Now, this ISB has several purposes. Obviously, these include the helping the ISB when it develops the new accounting standards, and helping the preparers, auditors, and other users of financial statements. And the overall purpose of the framework is to encourage the business entities to prepare the financial statements on a consistent and comparable basis, so that they provide the relevant, reliable, and comparable financial information to the users, right? So this is what the work of the IASB is basically. And then talking about the status, the IASB framework is not an accounting standard. If an accounting standard ever contradicts something in the framework, the standard will take the precedence over the framework. Now, this is a very interesting line, that if there is a contradiction between the standard and the framework, basically, the standard will prevail. And the framework may be useful in situations where the accounting treatment of a particular item or transaction is uncertain and is not covered by an existing accounting standard. Now, this is something again, interesting as well. And this gives us a rule of, or this gives us basically the importance of the framework, basically. Like at first, where there's a contradiction, the accounting standard will prevail. And when there is no accounting standard available or something, then obviously we will have the help from the rules or the guidelines of the framework, basically. So this is again kind of a to and fro motion we have over here, and this is what we are getting an idea about how the things are basically working. And again, overall, talking about the framework, basically the purpose, again, I mean, if we say the purpose of the framework is to state the principles and concepts that the IASB should use when developing new accounting standards. I mean, it should also be able to help the national standard setters to develop their own accounting standards in a way that they are consistent with international accounting standards. And it should help the individuals as well who are preparing or auditing the financial statements when they are not sure on how particular items ought to be accounted for, when it is not covered specifically by any existing accounting standard as well. So this is what basically the ISB did, or this is how basically they help as well. And then we have the users of the financial statements. And talking about the users, I mean, we can easily say that the financial statement should provide the users of the statements with the financial information about a business entity. And there can be different users as well, like the shareholders, other investors, employers, lenders, borrowers, suppliers, and so on, the government as well. So these are the different users. So every different user has a different requirement of information. For example, the shareholder is more interested into the profits, and the lender is more interested in as far as the interest coverage and all, like, the ratios are kind of concerned. So the ISV framework suggests that if the financial statements meet the information needs of the shareholders, they will also meet the most of the information requirements of the user groups as well. Like, the financial statements are basically a way of making the management of a business entity accountable to its owners. And for example, if the financial statements of a company are presented to the shareholders and inform the shareholders about how the directors have governed the company on their behalf or something, so this is going to be fruitful and this is going to be beneficial as well, right? So this is by this, basically we kind of tend to get the help for how the things should work. And then we have the objective of the financial statements. And talking about the objectives overall, uh, I mean, what to say about this? Objective is basically is to provide the information about the financial position of an entity and its financial performance overall during the period as well, and what are the changes basically are there in the financial statements, in the financial position as well during that time. So the user of the financial statements will use this information for one of the two broad, perspectives we can say, or the purposes we can say. They may use the information to make the predictions about what will happen in the future to the entity, and others may use this information like to check the accuracy of their early predictions about the entity, such as whether the entity has been profitable the way they thought, and has the entity been there, what they thought about, regarding the investments. And financial statements are also used to help users to make the decisions. Like, for example, they may be used by a shareholder to decide whether to continue to hold his shares in the company or whether to sell them. I mean, this is something very common as well. So the financial statement somehow, some way, they cater to every stakeholder. So every stakeholder is getting the benefit from that. And then assessment of the financial position. If we talk about the assessment of the financial position, we can see that the factors relevant to these are the nature and quality of assets, debts and mixture of the debts and equity capital. Then we have the liquidity, availability of the cash, and availability to pay the creditors, and information about the financial position is present in the balance sheet and related notes to the financial statements. So, technically speaking, the financial statements of an entity are basically the and the quality of the assets of the entity, because the entity will use these assets to generate the profits and cash flows in the future. And then the financial position is also affected by the amount of the debt that the entity owes, and whether it will be able to afford to repay the debt or not. uh, it also gives us the information regarding, the interest on that debt, if the entity is able to pay or not. And sometimes, when the debt providers, they can profit was more or less than expected, or is annual profitability increasing or falling, what might be the profit next year. So this is the information that we have over there into the statement of comprehensive income. And technically, in order to evaluate the performance of a company, obviously we measure it by the profit and information about the revenue, costs, profit. It is provided in the income statement and related notes to the financial statements. And the user of the financial statements can compare the actual profit with their expectations, and information about the revenue, costs, profit is provided in the income statement and related notes to the financial statements. Profits, investing activities, and the financing activities, and that is the cash flow statements. Obviously, talking about the cash flow statement, the cash flow statements do help us as well in order to identify where the cash has been spent, and we normally categorize our cash flow as. And information about helps the users to assess not just the effect of the profit or the losses in the period, but also the effects of the cash flows into in and out of the entry as well. So this is the multiple information that we get. And information about changes in the financial position are provided by the statement of changes in equity as well. So again, moving ahead from here, matching as well, the prudence as well. But the two main accounting assumptions which are always used is basically one is the conservative assumption and the other is the concern, and that is the entity will be able to pay its liability for the foreseeable future, and so is going to exist in the foreseeable future, or will cease or will keep on existing in the foreseeable future. So then we prepare the accounts on a realization base, and that realization base is obviously not in the scope of the accounting standards. And Can you guys hear me properly? Anyone? Can you hear me?
Yes,
Yes,
we
sir.
can.
Okay, okay, okay. Despite of the fact that I'm onto the 4G, the connection is still breaking up. Anyhow, let's just hope it will get resolved by this in like a couple of days, and definitely for sure. Anyhow, so I was talking about the accounting assumptions, and I was saying that the normal accounts which we have seen or we prepare, these are onto the, or these are because of the basis of the going concern, basically. And if the going concern assumption is hit, we don't prepare the accounts like this. The format is totally changed, and then we use the realization base, or the accounts are kind of made onto the realization basis. So that is not in our scope or something. We don't have to talk about that, but we just have to understand the going concern assumption is basically the one that the entity will continue for the foreseeable future and will be able to meet its liabilities. And then the accrual basis, if we talk about the accruals, and the accrual and the matching concept kind of go hand in hand. And when reporting the profit or loss of a period, basically the sales must be matched with the cost, or it must be matched the period to which it relates, and the expenses and the costs, then they are again like being accounted for according to the period to which it relates, regardless of actual cash payment or receipts. And this is basically the concept of the accruals. And obviously, we have to match the sales with their relevant costs as well. Income and expenses are recognized in period to which they relate. And the example is basically depreciation of the non-current assets is spread over the life of the asset. So that is the best example of the accruals basically that we have with us. And then afterwards we have this qualitative characteristic of the financial information, that is the understandability, reliability, relevance, comparability, and consistency in principles and methods of preparation. Now, financial information, obviously, talking about it, must be understandable to the users who have a reasonable knowledge of the business and the accounting as well. And the information has to be reliable as well. Users should be able to trust it and rely on it for making the economic decisions. And the financial information must be relevant as well. The financial information has to be relevant as well. This means that users should be able to use this information to make the decisions, and the information should be relevant to the decision, and it will help the users to make the decisions. And finally, as far as the comparability is concerned, it should be, or the financial information should be comparable as well. And users should be able to compare the information in an entity's financial statements with the similar information in the financial statements of the previous years, or with the financial statements of the other entities. So it has to be comparable, obviously, with own results or with the other results as well. And there is an important aspect of the comparability, right? There is an important aspect of the comparability, and that is called as the consistency, right? The consistency has to be there. That is the principles and the methods used to prepare the financial statements. They should be applied consistently by all businesses, and from year to year basis, it should be consistent in order to for the information to be comparable. If you want your information to be comparable, then you have to make sure that the information that you're providing, or the basis on which you provide the information, is basically consistent. And then we have this reliability of the financial statements. Talking about the reliability, the information has to be reliable, and the information needs the following quality. To be reliable, it needs the following qualities: that is fair presentation, substance over form, neutrality, prudence, completeness. Okay, talking about this, as far as the reliability of the information is concerned, uh, the information should provide a faithful representation of the financial position and the financial performance of the entity. and the transactions, they should be reported at a proper value, at a proper cost, and assets and liabilities shown in the statement of financial position, they should be shown in a way that represents fairly the true and fair view, and the true and fair, um, they are represented at their true value or amount, right? This is something I can say like that, that the assets liabilities which are reported, they should be reported at their true value, and financial statements should represent the economic substance of the transactions of an entity. And in cases where economic substance is different from the actual legal nature of the transaction, the economic substance should be reported rather than its legal form. I mean, let's just take the example of the leases over here. For example, if we lease a car, from the legal entitlement, the car is on the name of the lessor, that is the bank or any of the financial institution. But we are the one who are basically using the car, who we are the one who are basically enjoying the benefits of the car. So technically speaking, when the accounts are prepared, that car is not reported in the lessor's accounts, but in ours, right? Because this is what the substance so form is, that the legal entitlement or the legal title, apart from the legal title or not, we are reporting the assets into our financial statements. Done. So this is something what the substance over form is about. This is what basically the substance over form is about. And then talking about the financial information should be free from bias or neutral, and it should be not free from the neutral, but rather it should not be biased. The information should not be biased, or the element of biasness should not be there. I mean, this is what I want to say basically, or yeah, this is the right one to say. And then, when the final estimates are included in the financial statements, because there's some uncertainty about some actual amount something, then the caution should be used, because prudence means making sure that there's uncertainty about the value of an asset, but the entity is not able to cover or not able to properly calculate it. So it's not overvaluing the asset in the financial statement. Similarly, when there is something uncertainty about the liability, then the caution should be made to ensure that the liabilities are not understated, right? So we have to ensure these things. And talking about this completeness, information can be omitted if not material, and the extra cost of the completeness should not exceed the benefits obtained. Now, financial information should be complete, which means that it should not omit anything that is material, right? I hope you guys have an idea about the materiality. Materiality is something which can be material to someone and it cannot be material to another one at the same time, and materiality which can affect the decision of a shareholder, that is called as the materiality. Materiality is something that can affect your decision, that can influence your decision, that is called as the materiality. And in addition to this, financial information should not be it should not be complete if the cost of making it complete exceeds the benefit. Obviously speaking, when we have a higher cost which we incur when talking about the the access to the information is concerned, or say in case we spend extra as far as getting or extracting the information is concerned, then obviously this has to be dealt with, this has to be looked for as well, because obviously these are the three E's now: the economy, efficiency, and effectiveness. So this is something is applied over here as well, that the cost of the information that you're getting, for that you have to pay extra cost for the benefit the information you are getting from, or getting the benefit of it, you which you are getting. So this is something you have to keep in mind. Obviously, the cost should not be extra as far as the relevant or the extracted benefit from it is concerned. And then we have this Relevance of financial information. Talking about this relevance of financial information, information is relevant when it is used to make decisions. Information is used to make the estimates about the future. It has predictive value, or check the accuracy of the previous estimates if it has a confirmatory value. Information is not relevant if it is not material, like usually a significant amount. And information is not relevant if it is too late for use. Information must be timely. So over here talking about this, we have to ensure that the financial information must be relevant. Users need financial information to make decisions, and financial information should help them to make those decisions. The ISP framework states that information is relevant if it has a predictive value or confirmatory value, right? Predictive is like you can predict the future. Confirmatory value if it's related to the past or something. And obviously this is something you have to ensure. And the information is not going to be relevant if it's not material, and information is not material if when it is of such a small amount that it will have no significant effect on the reported financial position or financial performance of the entity. So one thing which is important over here is that the information has to be timely. This means that if it must be provided in time, it has to be provided on a timely fashion, in a timely manner, so that the informed decisions can be made by the investors or the shareholders. And technically speaking, if the information is provided too late, it will have no relevance to any purpose, and so will have no use. So this is something you have to keep in your mind. And then talking about the relevance and reliability, we have the reliability may be inconsistent with relevance, and compromise may be necessary. And for example, if it is, it may be necessary to provide incomplete information, a quality of reliability, so that it is provided in a good time, a quality of relevance. Added reliability and added relevance are not desirable if the extra cost exceeds the extra benefits obtained. I mean, same case, if there might not be enough time to gather the complete information and it may be necessary to provide the information, then that is incomplete but not too late. And so the reliability may therefore be reduced in order to make the information relevant. So this is something you have to keep in your mind, right? That at times we have to inform, and because of the shortage of the time or something, the information that we are extracting is not complete or something, but we have to inform because of its nature, because of its sensitivity or something. So at that time, we at times kind of go towards the reliance or the relevance of the information basically. Done. And obviously we have to evaluate the cost of the information as well. If the cost is higher, then there's no point of uh, getting the information if the benefit is lower, technically speaking. And recognition in the financial statements, talking about it, assets, liability, expense should be recognized when it meets the definition of an element and satisfy the certain criteria for recognition. And talking about the criteria for recognition, it must be probable that the future economic benefit associated with the item will flow to the in and into or out of the entity, and the items should have a cost or value that can be measured reliably. So these are the things uh, technically which we have talked about related to the recognition of the financial statements as well. So, guys, the thing is, basically at the start of the class, I told you that I would have to leave early today because of some commitments or the family commitments. Basically, I am still in between. Basically, I'm traveling and I had to stop somewhere so that I can, make up my time with you and we don't miss the class today. So, but we have to leave early today, and I'm really very sorry for that. But definitely for sure, this is my commitment that I will cover up this time in our later classes. But before we go, I want to have a bit of a certain feedback for my own self, that I would be really loving to have the ideas or the suggestions from you guys regarding the class, as what do you feel that we should do or we should add up as far as towards the class is concerned or towards the course is concerned. I mean, obviously, this framework is totally a total discussion based, and we don't have much to compute, or we don't have much to calculate over here, but rather this is just a dusting. But rather, I would say this conceptual framework, it's a dusting of your prior knowledge related to the reporting. This is what we are kind of which we have done today, and this is something what we will be doing in the coming half of our lecture as well. The next time we are going to meet, we are going to revise this a bit. We will be covering up a bit which has been left over today, and then we will be formally starting off with some accounting standards that we have covered in the past, and we will be having a discussion about that. So meanwhile, if you want to add something, you guys can. Otherwise, we are good to go. And these slides are going to be provided to you today or maximum by tomorrow, so that you guys can have an access to it as well. And then you can read them as well at your home. Anything you guys want to add or something?
I wanted to just clarify something.
Yeah, sure.
Uh, is the presentation sufficiently enough to go and proceed to the exams?
What presentation you are talking about? The ones I had for the note in the notes, basically.
Yeah, like we can, because the notes are simple and it is really easy to understand, so we can really go through it itself rather than the being bookish on the Kaplan book and all.
Uh yeah, it is fine. But again, you must have noticed something, that I just made some bullet points over there, and I was explaining those points, right? So if you have an approach that you keep those bullets points in mind, and then you are able to explain them for like around in maximum 2 3 lines, then it's enough. Then it's enough,
Okay.
right? But if you expect to write only these bullets points in the exam, then you won't be able to justify your answer, because at certain points we need to explain a bit.
Okay.
I'm not saying that you have to write full pages onto one single point or something, but yes, you can create a balance. But again, I will have to see what you produce as an answer. Only then I will be able to judge you. But again, these slides, these are really very helpful. You're totally right. And you can go through these as well, because these are written in simple English and all, and there's no complexity in them as well. You can go through them. As far as this framework area is concerned, yes, you can go through, but again, you will have to write about them a bit as well. You will have to write about them as well.
Okay. So the part that we have to write will be involving the slides as well in the other slides.
Not the other slides, but this is the part. Let me share it with you again. I mean, just give me a second. See, this is the recognition of the financial statement. This is now how do we record the assets and liabilities, the expenses in the accounts, basically, right? So if we
Okay.
are looking at this slide, right,
Mhm.
we are talking about a complete recognition criteria for each asset, expense, income, liability, and capital, right? And now it says that when it meets the definition of an element. Now, what is the definition of an element, by the way? We should know that as well. What is the definition of an asset? What is the recognition criteria? Satisfies the recognition criteria. It's writing that you have to satisfy the recognition criteria. Na? So what is the recognition criteria? You have to mention that as well.
Okay.
Getting my point?
Okay. Yeah.
Yeah. So these are the two things. If you write these two things, then you are fine. You are good to go.
Okay.
Done?
I got it. Thank you,
Okay.
sir.
Okay, no problems. You are more than welcome. Anyone else? Any other question or something? Okay. We are good to go for today. And thank you, please, for understanding that today I had an issue. I'm saying again and again, because I'm not kind of like, feeling okay about this. But, I had, rather than like, to not to take the class, it was better to take the class and like, and start off with our like, course and all. So that's why, like, I just took the class. And definitely next time we will like, compensate for it, like, so till we meet again, enjoy your day and enjoy the week ahead of you as well. So till we meet again, bye bye, take care. We'll see you soon. Bye.
Bye bye. Thank you, sir.
Thank you.
Thank you, sir.